We got two in here. Good morning, Josh. Good morning, Scripty.
How you doing, brother?
Hey, there he is. What's going on, man? Good, good.
Good. I'm just dealing with some audio. I just tagged everybody. Were you able to start the stage and notify everyone? Because usually
I
that's how we
started
can
the
get
stage. I don't know. I didn't actually notify anyone. I don't think so. I should
Okay.
have. Yep.
All right, well, we'll get some more people
Yeah.
coming in here shortly. I
Flux.
just
What's
made an
going on, brother?
announcement.
Good morning,
We'll give
everybody.
it probably about like 2 or 3 minutes,
Yeah.
and then we'll look to start. Are
Yeah.
you able to record on your end by
I
any
already am.
chance?
Yep, I already am. Yep.
Awesome.
Mm-hmm.
Good morning,
Already
everybody.
started. Yep. It's coming in. All is well,
Amy,
Flux.
Bullish, Lux, Kashawn, Lex, hello to you guys all.
Welcome in. NASDAQ is just running.
Yeah, it's a contract rollover week, so
Mm-hmm.
it's going to be a little bit challenging
Mm-hmm.
to
Oh,
kind
you
of
know
see
what?
that
Is
the
this
volume
third
on
week?
post.
It might be triple witching this week too.
Yeah, that's what it is too.
Yeah.
You got triple witching at FOMC, you got contract rollover.
Yep. You got all
A
the
lot
good
of
stuff.
reasons. A lot of
FOMC,
reasons. Yeah.
FOMC. Yep. So
Will
it's a
definitely be interesting with the rate cut that they're anticipating
yeah.
and or
I
expecting.
think about a quarter point's already built in. 25 basis points is already built in, but we'll see what happens. I haven't
Yeah,
OSOC'd
cutting
FOMC in a long time, and but I'm gonna do it this week. This one because I feel it has a little more writing on it this week.
cutting rates at all-time highs are it's kind of interesting, right?
Yeah, yeah, it is. It is. I mean, it's and inflation went up a little bit um this past week, so we'll see what happens.
Very, very interesting to say the least.
Yeah,
We'll be
if the
supporting
Fed sticks with
volatility.
his current policy, I don't honestly don't think he's going to cut. I don't think that he's going to cut. And I think he doesn't want to
Could
cut
be,
just so he can spite Trump, man. I feel like that's the only reason why he doesn't want to cut. So, but
that'd be a very big surprise to the market, right?
it would. Yeah, it would. That's why I think OSOC would be decent this time because the last few FOMCs have just there hasn't been much volatility at all in them just because there's the market pretty much knew what was going to happen. So, but we'll see.
Interesting.
We shall see. Yep,
All right.
there
So I think
is.
we're at around we're at that like 10 o'clock mark right now.
Yeah.
It's kind of your call if you want to give it a little bit more time and or
No, we can start rocking and rolling with it. We can go into it.
all
But
right.
what I was really going to talk about today mostly the updates that have been done to the TTFM and
Absolutely.
how I've been using them. So I know most people probably know there's already been the update. I know that I trade with TTFM along with the AR levels. But one of the coolest updates that has come to the TTFM is obviously the SMT added, and the beauty of the SMT, I think SMT can be overused. I think everybody uses they find every little SMT and they try to find a reason to get into a trade. And the way I look at SMTs is that I think too many people, they see SMT and they're like, okay, I'm going to take this trade because there's an SMT. Well, really, you should only be looking for SMTs at certain levels, and that's what I like about this update with TTFM is that it's only really giving SMTs on the higher time frames when it really matters. And for example, I trade on the 15 minutes. So then what it's going to do is it's only going to show you SMTs on the 4-hour candles between the C1, 2, and 3 candles. So essentially confirming whether there's a reversal or not. Let's see. Let's go to 6E. 6E is a great example of this last week. Let's go to this one right here. So here's a great example of this.
You mind sharing your screen? Because I
Oh, I'm
don't
not
think
sharing
that.
it yet. My bad. Hold on.
Yeah, yeah.
Yep. I need to share
Did
the
anyone
screen.
else in the chat confirm if they see screen or not?
No, I haven't shared it yet. I'll do that right now.
Okay. I just want to make sure it's not just me.
There you go. You know what I'm doing? I'm recording my direct screen in OBS, so I just figured that it was on the screen.
Yeah,
It's my bad. Yep.
I got you.
So everyone should be able to see it now, right? Everyone can see the screen now.
Can someone confirm it's inside of the audience and the stage if they're able to see? Appreciate you,
Yep.
Keith. Thank you.
Cool.
VR, what's going on? Appreciate it.
Yep.
Abish, hello.
Good morning. Good morning.
Nesty.
Good. Okay.
And
So this is what I'm talking about is right here, how where the SMT that is being alerted to is in between these candles, the candle 1 and the candle 2 on a 4-hour chart. So that I feel is more relevant and more important than like a little 15-minute SMT here or a 15-minute SMT here or a 1-minute SMT here or an SMT that was from here and like 5 days ago, right? This is telling us that between the reversal candles, the 1 and 2, that there's an SMT. So that's one of the biggest things that I enjoy about this update is the fact that it's alerting us of only very relevant SMTs. It's not putting SMTs all over the place, right? Because I know there are some other SMT indicators out there, and you'll get one that's like it pivots off of four different swing points. You're like, what in the heck is going on? So it actually is doing the most relevant SMTs. But what the second thing that I've really enjoyed the most about, and especially in my busy schedule and all the other businesses I've run, real estate and everything else, what I've really enjoyed is the auto bias alerts. And for me personally, I'm on the 15-minute chart. I trade with the auto bias 1, which what that's going to do is it's only going to show me 4-hour TTFMs based off of the daily bias. Now, is it going to be wrong? Sure, it's going to be wrong. But what it does is it allows me to not have to be staring at my charts all day long. And I can simply get an alert and go, oh, what do you know? We have a 4-hour TTFM in line with the daily bias. So I don't have to do anything else. And so what I did was last week I was on vacation. I actually took one trade last week. But other than that, I really didn't trade because I was on vacation. I was back down in the Keys again, Josh, down by you. But and so what I wanted to do was I wanted to look at last week. I went back and did this over the weekend, and I said, okay, from a pure mechanical standpoint, if I were to only trade simply based on getting alert, looking at nothing else, not looking at market structure, not looking at where there's valid higher lows, whether we swept something, literally just as mechanical as it can get. Not worrying about news events, like nothing. And I'm not encouraging this. I'm not saying you should do this. I just wanted to see what the mechanical side of this would look like. And I was actually quite surprised because I know a lot of people, I've seen on social media last week, said they didn't have the greatest of week, especially on the indices. And I'll be honest, I honestly have not traded the indices in quite some time. It's been probably a few months that I've ever found that I've even tried to find a trade on the indices. Yeah, Forge futures last week.
Focusing on what assets are you focusing on right now?
Like everything but the indices. So gold, silver, oil, RB, 6E, 6B. That's it. So those main assets right there. And so what I found was and I'll go over each one of these trades. These were alerts that were given. There was like one or two that was like overnight. I didn't count those. Like every trade was basically, the earliest trade was 8 a.m. and I think the latest trade was 3 p.m. And this is one of them right here. And simply just on a 15-minute chart, getting 4-hour TTFM alerts with auto bias 1 on. There was 11 trades last week, and it had 8 wins and 3 losses for over 10R. Literally as mechanical as it gets, doing nothing else. because I just wanted to see if that's even a possibility, like what that would even actually look like. So let's go ahead and look. So here we are. We're on euro. So here's the first one on euro right here, essentially. This one was a little later. In other words, this one really technically didn't count because the CSD didn't actually happen until way up here. So we'll scratch that one. But this was the example that I had. So this was a 0.6R. Now the reason why it was 0.6R is you can see. So here's your daily bias was bearish. We had this SMT right here. This is at the 10 o'clock. We expanded down. And what I want to see is my entry functions are an open high going into the TTF or into the T spot, and then a close either through 50% of these up close candles or a close coming out of the T spots. That's this example right here. We had this close back out of the T spot. What this means is this right here, these series of candles, this is now the wick of the 4-hour candle. So that's what I want to let form first. I want the wick of the 4-hour candle to form and then trade the body of the candle, right? So here you can see, here's the 4-hour candle. There's the wick of it. So you take the entry there, your stops there. Now, this never would have been stopped out. However, because I'm trading props, technically you have to close out by 4:45. So on all these trade examples, if it didn't hit 2R by 4 p.m., I just counted them as closed out. Now, if we continue to watch this going into the overnight session, what happens? Well, let's see what happens. Here we go. It opens back up. Overnight, we go into the C4 T spot. We trade into it. We trade back out of it. You could have taken an entry here because here's a 15-minute change state of delivery, or you could have waited until you had this close right here. And again, this is an overnight trade. Could have taken that there. Oh, wrong one. Go for the short. And just see if this one here got 2R. It took all night long, but it got 2R. So this is just another example. This one I did not count into the numbers because it was overnight, but this is a great example. I watched this one live play out. By the time I was gone out for the night, I was no longer watching it, but this one played out beautifully as well. So, but let's go ahead. So gold was another one. Let's see if there was any. Yeah, that was only one on euro. We'll go to gold for the week. Gold was interesting. Starting out Monday, another. We had a C2 at 12 a.m. We had a C4. This would have been at 6 a.m. Once again, we traded into it, came out of the T spot, take the close through right here where, if you can see, we retested the T spot. We had a change state of delivery, so an inter-candle change state of delivery. So now, basically, this is your wick, essentially. That one went for 2R. Actually went for more than 2R, but that was just where I marked it out at right there. This was another one where it didn't actually ever get stopped out, but we had to close it out. This was the one trade I did take for the week on gold. No, I'm sorry. This was the one I took on gold. This one never actually got stopped out, but because, once again, prop rules, close it out at 4. But as you can see, it continued, and it would have wound up getting 2R if you could hold overnight. But once again, it's the same thing. It's just purely mechanical. You get your alert. It's a 4-hour C2. We go into the T spot, went past the T spot, but then we had to close back through it. So you just take the close. So here now is the wick of this 4-hour candle. You trade down with that wick. Let me just close this out here. Yeah, Ford's futures, all of my trades are on the 15-minute. I've been trading the 15-minute chart for probably the last almost 6 months now. So this was the one trade I did take on gold. Again, it never technically got stopped out, but I had to close it out at 4 o'clock. So I closed it out and took only 0.4R on that one. So starting the week, you had 2R on gold, then 0.74 on gold, then 0.4R on gold. And this one, once again, actually did wind up playing out. Never got stopped out. You had another 4-hour C2, and this one did wind up going to my original TP, but I wasn't in that trade. This was the only one that did actually get stopped out. So right here, and it actually got stopped out with the 4 o'clock close. My actual stop where I originally started was down here, but that did not get hit because I closed it out at 4. It would have been closed out at 4 o'clock. So let's see here. That's that. Yeah, I totally understand that. Bullish MF. There hasn't been a lot going on the indices. Now I can tell you in Q on Friday, I did not trade this, but if you look at Friday and we go to a 5-minute chart, actually start from the daily. So for Friday, this is what you would have been looking at. So Thursday, we had this strong bullish close. It did technically sweep Wednesday's high and close within the range. So technically, you could say, was that a C2 according to TTFM? Well, we'd have to see if there was an hourly change state of delivery here. But sometimes you can't be 100% mechanical, and it has to be somewhat where you have to use your discretion. After this big bullish candle, you'd be looking for another long here. So essentially, you'd want to see us open, go low, respect 50% of this candle, and go higher. Now, there wasn't a 15-minute entry, but if we look at the 5-minute for Friday, there was actually a beautiful 5-minute entry if you trade the 5-minute. So the same scenario of what I do on the 15-minute. This is on the 5-minute without a bias 1, so it would grab the bias from the 4-hour. So here we go. We have a hourly C2. This is the 10 o'clock open. We open, go a little higher, but then we come down into the T spot, and then we have this big reaction out of the T spot, closing above 50% of that candle. The trade, you could just taking it on the close through with your stop right there. And this one wound up getting 2R as well. So this was on a 5-minute chart. So that is one of the trades that was valid for the indices last week. Now let's continue and see how else. So then we had a C4 at 11 a.m. and came into it. We had another 5-minute change state of delivery right here with an SMT. So you could have taken this one as well with the stop right there. And did that get 2R? It did get 2R. So, but those are just some of the updates that I'm really loving with the TTFM. But let's go ahead and keep going on these other assets. Go back to the 15-minute. So silver, I think silver was, yep, here's silver. So we had 1 win, 1 loss on silver last week. So here's the win. Once again, we had a C2 and the 2 o'clock candle wound up happening into a C4 after the 10 o'clock candle. We came into the T spot, had to close through, take your position there, stop at the low. There, that got 2R. Now here's one that was another one where we just closed it out right here at 4 o'clock because it did not wind up going to TP before 4 o'clock. So that one wound up being a loss. Let's see here. What else was there? CL. I think CL was the only full 1R loss on the week. And yeah, it was right here. So same thing, just over again, being completely mechanical with it. This is an invalid C2 because it went higher, but this was a 4-hour C2 in line with the daily bias. Came into the T spot. The T spot isn't there anymore because it was invalidated. We had a strong close through. Take it right there, and obviously that one was a loss. So that was the only oil trade. RB, there was a trade for RB. Let's see. Yeah, right here. So any of you that are familiar with TTF understand that there's multiple entry functions. One of them being a lower time frame fractal model. In other words, a C2. So not just using the higher time frame, but also using, and I do this a lot, but I will only use this. So in other words, there's a 15-minute C2. You'll take it on the open of the C3. I only trade that if it's doing this out of a point of interest. So you can see we have a fair value gap here. We went up into the fair value gap, which is layered with this giant T spot. But then we had an ideal candle 2 closure on the 15-minute out of this fair value gap. So you can take the entry on the open of the next candle. And that one ran for 2R. What was the other? Yeah, that was all there was for that one. Indices gave no 15-minute trades, neither YM, ES, or NQ last week. based on just the pure mechanicalness of the TTFM with the alert. So essentially, all these trades wound up, like I said, there was 11 wins or 11 trades, 8 wins, 3 losses for 10R. All were simply based on you get an alert, which here's my alert log right here. It'll tell you if there's an SMT, if there's not an SMT, and then literally just going, looking at the chart, waiting for it to go into the T spot, have some type of reaction out of the T spot, meaning that the 4-hour candle is formed and you want to trade within the body, not just the wick. Let the wick form within the T spot and then trade away. And I think that's where a lot of people get confused with the T spot. They think that the T spot is the place that you should just automatically take entries from, and you can. But the T spot is there to teach you that you should be looking, if this is going to be a continuation, the T spot is where you want to see the higher time frame candle, the wick of that candle form. So once that's formed, then that's when you can trade the body. So, but that's just the pure mechanicalness of not taking anything else into account and seeing what the results are. Which, I mean, that's just, again, it's just 1 week, but that's pretty good results. So, let's see here.
I really like this, and this is really important for everyone to understand also. It's like just becoming familiar with your own data collection.
Mm-hmm.
Like it's so powerful because like how much does that help the psychology? Because like I want you to like also kind of touch on that point too.
Yeah.
Like
Yep.
when you're able to just go through and you're back testing that specific model or that specific alert, like when that next alert happens, like you're having a completely different mindset than just saying, oh, this is the first time I'm seeing this,
Yep.
right? Like
Yep.
and this is really important that we also stress this, like during any alerts, and or any new updates, like it's your guys' responsibility, obviously, to go and test and find out that data.
Yep.
And once you go through and you find your own data for whatever time frame that you feel the most comfortable on, you're going to see a very, very big difference in the way that you're approaching the markets because you're not operating from a point of just like let's call it blinded trust.
Mm-hmm.
It's just now your own, like you make it your own,
Yep.
and that's like owning that to your personality is very important. I appreciate you sharing this so that people can also be inspired regardless if they're trading TTFM, they're trading other indicators, or there are other models or strategies. Like this process that you're showing right here is extremely important to what's becoming a successful trader. So just want to
Yeah.
make that note.
No, absolutely. Yeah, because at the end of the day, what makes us take trades is conviction. And if we're second guessing anything, and that was one of my biggest downfalls when I first became an ICT trader was I looked for every single fair value gap, and I was like, oh, well, there's a fair value gap on the daily, and then there's a fair value gap on the 4 hour. There's a fair value gap on the hour. There's a fair value gap on the 50. Like, which one am I supposed to worry about? Which one am I not supposed to worry about? And I think we all can get stuck in that over analyzing of too many PD arrays. I think that's the one downside to the ICT trading specifically is that there are so many PD arrays that they're going to conflict each other. And I got to be honest, being close with AM through T, he was AM does not count fair value gaps. Like he does not look at a fair value gap and go, oh, that's a fair value gap. Like he ignores fair value gaps. He also, to an extent, is not that worried to enter a trade if there's a swing high somewhere and go, oh, well, it's only this far away to this high, so maybe I shouldn't take the trade. And then guess what? You don't take the trade, and then it just blows right past that high, and it's like, well, why'd I even worry about that? So that's why with this auto bias update, I wanted to be able to, because it's new. I mean, you guys just obviously I've been granted access because we know I'm a beta tester, so I've been able to test it longer than others. But I wanted to be able to get to the point because even myself, I still am like, oh, well, I might not want to take this trade because of this here or that there, and then like I said, the price just flies right by it, and you're like, well, dang, that sucks. I didn't look. So the more that we can not overanalyze, the more conviction we're going to have. That's going to allow us to push that button. Because at the end of the day, the difference between a successful trader and an unsuccessful trader are the traders that push the buttons, right? We have to be able to take that risk. We have to push that button. I mean, how many times have you guys seen a trade? You had excellent analysis, but then you talked yourself out of the trade. Yeah, I can definitely show the Iman. If you guys have done that, put a 1 in the chat. I want to see how many people have done that. Mm-hmm.
Again, the whole reason of this too is that you guys just need to be honest with yourselves. Like the more you're honest with yourself and the more you don't hide from, specific questions that might not feel like quote unquote sexy, like that's what's going to show you the growth. Like those are
Yep.
the pain points, those are the triggers, those are the times that, people potentially lose their cool on the charts and they don't understand again like what those triggers are. If you want to be able to solve them or not be able to, experience that in the future, you got to know what triggers you.
Yep.
And that I can definitely say that I've been a victim of that.
Yeah.
So
Well,
definitely raising my hand here.
me too. Yeah, I'll put number 1. And that has always been my biggest struggle, and I think part of that is you learn too much, especially when it comes to the ICT space. You want to learn every concept, every model. You just keep consuming, and you're like, oh, well, I'm gonna play IFEG reversals. Oh, I'm gonna play breakers. I'm gonna play, only trade off of a fair value guy. I'm gonna trade, and you start getting all these different concepts in your mind, and all we're trying to do is push a button, right? That's what we're trying to do. At the end of the day, we have to push the button. If you don't push the button, you don't make money or lose money. Either way, right? So the more we overanalyze, the harder it is for us to push that button. So I myself, even in my trading as of today, am trying to make it as mechanical as possible, and say, okay, can I just get an alert? Because number one, I've been trading TTFM for a while now. Many of you know I had my own C2 Unicorn, which was a modified version of the TTFM that I traded for most of last year. Received multiple payouts. In fact, received my very first payout ever because of trading that model. And going into 2025, I completely got rid of that model. And the reason being was I learned more about myself as a trader in the ICT world. And that was, I didn't want to be a reversal trader anymore. I wanted to be an expansion trader. So I completely changed how I was doing everything. But in that process, you're going to have, conflicting biases or conflicting things on the chart that are going to prevent you from wanting to take a trade. So can it be as mechanical as possible? Well, number one, you have to have a model that you trust. I trust the TTFM, not only because I know T has traded it and he's been very successful with it, but there are hundreds, maybe even thousands of other traders that trade the TTFM that are confident in it. And that's the thing. You have to. I think we all as traders, we go through this process of what type of trader am I? What model or basically what model I'm going to trade? But then, do I have trust in that model? Well, how do you build trust in that model? Well, one, other traders' experience. Two, back testing. But three, realistically, it's trading it live in a market, right? So you have to build conviction in that model. Well, that takes a lot of time, and a lot of people don't have the patience to do that. And a lot of times people are going to sit there and they're going to be like, oh, we'll give it a couple weeks, and they're like, oh, that didn't work. Well, let me go to another one. Oh, that didn't work. So then if you're just jumping around, you're never going to build conviction in one specific model. You have to build that conviction in one specific model. And you have to build conviction in that one specific model, even when you're going through a losing streak. I think that's what a lot of people do is they have some success, they go through a losing streak, and then they're like, oh, I'm done. And then they abandon the model, right? And realistically, there was nothing wrong with the model. It was just a bad streak that you have. So is there a way to be fully mechanical, not worrying about, when you're about to take a trade? Oh, well, there's a fair value gap up here. Oh, well, this is a high. Maybe I shouldn't go past that high, right? So I do believe that with the auto bias, the way it's set up with the new TTFM updates, it can be that mechanical. Again, just one small little sample size was last week when everybody knows last week was tough to trade, right? But yet there was 11 trades strictly mechanical, 8 wins, 3 losses. Not one of them were on the indices. Not one of them. And I think that's part of it as well, is not just only looking for NQ. or ES, or YM, whatever it may be. And to a side note to that, when I have traded indices within the last few months, it's been YM. YM's been the cleanest out of all of them. But it's trying to build that conviction of, you get an alert, you don't have to stare at the charts all day long. You get an alert, you go, oh, perfect. I got a C2 or C3 on a 4-hour while I'm trading a 15-minute chart, and that's based off of the daily bias. So I already know the daily bias is good. You know, it's not going to be right all the time, but you have trust that it's only going to alert you based on daily bias, and then it's going to alert you on your 4-hour fractal models into your 15-minute. Now, if you want that same thing and you are a 5-minute trader, well, then you put on auto bias too. So then if you're on the 5-minute chart, and you set alerts with auto bias 2 on, then that's going to pull hourly fractal models from the daily bias. Ashar, yeah. So the auto bias 1 and 2 are simple. They're one time frame up from whatever TTFM model you're trading. So if you're on a 15-minute chart, the higher time frame fractal is a 4-hour. That's the time frame aligned TTFM. If you're on auto bias 1, it's going to give you a bias from one time frame up from the 4-hour, which is the daily. Okay. If you're on auto bias 2 on a 15-minute chart, it's going to give you 2 time frames up from the higher time frame TTFM fractal. So that would be the weekly. So if you're on a 5-minute chart, I apologize, I misspoke earlier. If you're on a 5-minute chart, the higher time frame TTFM is an hourly. So if you're on auto bias 1, that's going to give you a bias from the 4-hour. If you want a bias from the daily, you would be on auto bias 2. So that's how the auto bias works. It's just 1 or 2 time frames up.
You guys can see also through the settings of the indicator, if you go to the fractal, you'll be able to see the specific pairings of the
Yep.
model, and that should be able to help clear up some questions that you guys might have.
Yep.
Yeah.
Keith, how did you understand it? He was saying that's not how he understood it there. So it is, Keith. It is. Iman, on the 15-minute, I'm using auto bias 1. So Keith, if you look at that screenshot that Josh just posted, the alerts for the TTFM when it comes to auto bias, or not even the alerts, just auto bias in general. Auto bias 1 is simply one time frame higher than the time frame aligned higher time frame TTFM. So if you look at what he just posted there, you see how it says 5-minute, 1 hour. Okay. So 1 hour is the higher time frame TTFM from a 5-minute. So if you're on auto bias 1, one time frame up from an hourly is a 4-hour. Okay. So then that's going to give you auto bias 1, if you're on a 5-minute chart, is going to give you TT at 1 hour, 5-minute TTFMs based off of 4-hour. If you want it based on the daily, 2 time frames up, then you go to auto bias 2. Yep. So Air 360, there you go. That's a good breakdown. Yep. So it's just one time frame up or 2 time frames up. Yeah, and you could even, I mean, do what Air 360 did there, and literally you can look, right? So if you're on a 1 minute 15-minute, right? If you're on the 1 minute 15-minute, one time frame up, I believe actually 15-minute I believe skips the 30-minute and goes to the hourly. And same for the auto bias 2, it goes to the 4-hour for that. I believe the 30-minute is skipped, so it's 15 1 hour 4-hour daily. So they're all grouped together into the one. So yeah, I can definitely show you how to set alerts. Okay, so I have all these alerts set already. So I have a couple different alerts set. So number one, first and foremost, I want to see daily closures. Okay, so if I want to see daily closures, I would go to an hourly chart. Okay, so I'm on an hourly chart, and you pick what alerts you want to see. So we're in here and we go, okay, I want to see C2, C3, C4. Maybe some people don't want to see C2s or they don't want to see C4s. Fine, whatever. You pick what alerts you want. You need to make sure your alerts are checked here. Okay. If you want to get early CSDs, you would come down to the early CSD and turn that alert. I don't care about early CSDs. That doesn't matter to me. And then the SMT. So this is the first alert I have. So then you simply are on the hourly time frame. You go into here, you say add alert. I go in and I will change it and say daily TTFM. And then the way that, see how it says here, how I have the C2 closure. The way the log will show you is when you have a daily right here. So here's a ESC2 daily closure. C2, I labeled it C2. It doesn't really matter. It's a daily closure. So then I'll get an alert at 6 p.m. that, oh, hey, guess what? We have a bearish ESC2 candle. So that starts from the daily. So that's kind of like, oh, hey. So that is one way I kind of know what am I going to be looking for going into the next day. And that alert you're going to get from the daily at 6 p.m. every single day. So you're going to get an alert that tells you, hey, based on the previous day close, this is the candle that we're looking at. So that kind of tells me, hey, these are the assets you should be looking at first. Then from there, on a 15-minute chart, I do the exact same thing. I'm on my auto bias 1. And on that, on the daily, I just have it as neutral. So that way it tells me either direction. I don't care as far as the bias is concerned. But for the 4-hour, I'm on auto bias 1, and I do the exact same thing. I make sure all the boxes are checked that I want to get an alert from, and then I simply just go to the indicator, add alert, and then change the message. And in my message, I have it here. It just says silver auto bias, NQ H4 auto bias, gold H4 auto bias. So it starts with the daily alert. I get a daily alert on my phone. I go, oh, look at that. We had a daily closure, and it's bearish. Well, now I know that that specific asset's going to be bearish for the day as far as the bias is concerned. Then I just need to pay attention to the alerts on the lower time frame. Now we have our daily alignment, and then we have the 4-hour down to the 15-minute. So it's a way to eliminate a bunch of assets, right? It's a way to eliminate and go, you know what? I'm not even going to look at any of these. I'm just going to look at the assets that give me my alerts from my daily first. And then once I have that, I go, I know I'm looking for ES. I'm looking for this. And it could be as simple as you get your alerts and you go, you know what? I have my watch list right here, right? Like these from here up is what I look for, right? From here up. So these are my main assets that I look for every day. Okay. So then I can go, oh, all right, well, we got a bearish alert on ES. So let me put my red little flag there. Oh, we had a bullish alert for oil. Let me put that there. Oh, we had a bullish alert for gold. And then that's a way for me to quickly go, these are what I'm looking for going into the day. So it helps narrow it down. So you're not trying to search a whole bunch of assets and go, oh, what is this one doing? What's that one doing? What's this one? Quickly, you get your alert from the daily. You label your flags here on your watch list, and then you just wait for the alerts on the lower time frames. So
I really like what you did there. I would like to make a point if possible on that. So
sure.
you guys are seeing really what, this is what good organization looks like, right? Like you guys can set up your alerts and it can be a little bit confusing if you have multiple alerts set up. But what you're being, shown here is that if you take your alerts and then organize a specific watch list relative to your alerts, like let's say you wanted to put a specific section on the watch list that says C1 alert or C2 alert,
Yep.
and then you can literally just start dragging things like that. So alert management is also very important. So I'm really happy that you're talking about this right now.
Yeah. Well, and I think alerts get overlooked. I made that post oh yeah, it happens, Baxter. And trust me, I only tell you this stuff, guys, because I've personally experienced this stuff myself. That's it. That's why I'm talking about this stuff. The struggles that every trader, we all go through the same struggles. And there would be times I'm like, oh man, I was so focused on NQ, I missed the gold trade, or I missed that, or I missed this, because I was too honed in on one asset, and I'm like, oh, how do I keep track? Because I mean, look at that. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 assets that I'm trying to track. That's a lot. But when you can narrow it down based on a model that you trust, it helps filter out a lot of stuff. right? So that way you can just go, okay, I'm going to get my daily alerts. It starts with that. I know I'm looking at bearish or bullish for the day based on the daily TTFM. Now, is it going to be wrong? Sure. There's going to be times when it's wrong. Okay. But there's a high enough percentage of the time that it's not going to be wrong that you can just chuck it up to, you know what, I'm not going to trade for that day, you know, or I'm not getting a trade on that specific asset for that day. So being able to filter out what you're looking for and then waiting for that second confirmation being my 4 hour 15 minutes, right? Now, on days when it's neutral, right? There's an inside day, you know, or we didn't have a high or a low swept, or we're not. That's where, if you want to trade that day, I'm starting to not even worry about those days, because I've learned that with all the assets that I'm searching, especially with 20 funded accounts, you don't have to find a trade every single day. And that's the other part of important part of trading, is having enough capital to where you're like, oh, well, I have to take a trade today, or I have to take 3 trades today, or else I'm not going to make enough money. We're never going to be able to impose our will on the market. The market gives us what it gives us, right? And be happy with what it gives you. But if you have more funded capital, or more capital in general, you can wait for certain trades to come your way. It gives you the ability to have patience. But if it's a neutral day, that's where my AR levels really comes into play, because it with the 33% levels and looking for your reversals around those levels and then trading from one side of the range to the other, that's where the AR levels really shines. Is especially, not only is it a confluence on a day where we have a bullish or bearish bias, especially if we have a bullish or bearish bias, and say it's a bullish bias and we open and go low first, and I see that 4 hour C2 put in right at the 33% level, man, I'm licking my chops when I see that. All right.
That's
Really
your bread and
excited. Yeah, I'm like, holy cow,
bread and
let's
butter.
go. I love it. Yeah. So those are beautiful. But it's on the days when you don't have a clear bias where the AR levels really help me find confluence to be able to get a trade somewhere. So, and just looking at your average ranges and everything. So, but I think someone asked what my settings were for TTFM. So did you have to set it? Yes, Sonic. So I'll go over this again, and I was a little confusing. I apologize. So on the daily alerts, so if you want to set daily TTFM alerts to start with, we're going to go to an hourly chart, and the bias is going to be set to neutral, right? So you want it to be neutral. You make sure you have your alerts checked. Check which days you want. Just, you could do it by default, C2, 3, and 4. I do not have early CSD alert because I don't care about the early CSDs. And then I do have SMT set. All right, so you make sure those are all checked. Then you simply hit these 3 dots in the indicator, hit add alert. And then what I do is, in the messages, I would change the message to RB daily TTFM. Okay, and what that's going to do is, when the alert pops up, it's going to show you this, but then you're going to see this. So mine, I labeled them C2, right? But it's going to tell you right here, ES C2 daily closure, and then it's going to tell you it was a bearish candle 2 based off the daily. All right, so that's how I set the alert for the daily, and you set that on neutral. That way you because if you're doing an auto bias on the hourly for the daily, then that's going to be based off the monthly. So you don't want that. So you just want neutral bias. Set your daily alert. All right, at 6 p.m. If it happens at 6 p.m., meaning it happened the day before. Now sometimes you don't get the hourly change in state of delivery until after, and you may get an alert at like 6:15 or 9 o'clock at night, whenever it may be there. But for the most part, if the hourly change in state of delivery happened in that previous day, as soon as 6 p.m. happens, you're going to get your alert as soon as the open of the next day happens. So you're going to get that. Then for my 4-hour alerts based off of the daily, that's when I'm going to go to my 15-minute chart and turn on auto bias 1. So that way it's in line with the daily. Yep. So you just do the same thing. So again, this is how I have mine labeled. silver 4-hour auto bias, and then it tells you which candle that you're in. And then if there's an SMT, it'll tell you there's an SMT. So, um, and so that's how you have it. So you have 2 layers of alerts. You have your daily that gives you your daily playbook to go, okay, I'm looking for this and this and this and this. And so like right here, if we're looking at these ones, really ES was the only one, and it got invalidated, and it was invalidated fairly quickly. And another way to easily see invalidation points for me, if I'm on a daily chart, it's really simple. Now this was a clear C2 closure on the daily. Well, all I'm going to do at this point is I'm going to then take my fib and I'm going to measure from here to there, and I want to see us respect 50%. And clearly early on we did not. And a good telltale sign of that is look how little this wick was on the daily candle. That's a baby little wick, right? That's probably going to be an expansion candle, and that's what it did. So this was a great example of where the bias was wrong. Okay, but guess what? I didn't take any trades. I didn't lose anything, right? Even though the bias was wrong, I didn't force myself into taking a wrong trade. It just there was no trades. So, um, it starts with setting those daily alerts, then going down to the 4-hour and 15-minute, and then you just wait for your alert. So it's one way to spend less screen time. Because the other thing about staring at the screens all day is a lot of times we get impatient and we might wind up taking a trade that we shouldn't otherwise because we have nothing else to do and we're just staring at the screens and we go, oh, well, what's the 5-minute look like? What's the 1-minute look like? And then you get yourself in trouble. So having the alerts, you just wait for an alert. Yeah, it is dangerous. Yeah, very dangerous. So, yeah, I think we're all guilty of that. Yep, it happens. So, having these alerts, it kind of forces you to have some discipline, especially when you have your daily alerts set first. Because you're just like, and I get the alerts on my phone. I'm like, oh, okay, look, I'm looking like this. This is looking like that. Okay, cool. Yep, let's see what Sonic did there. Yep, there you go. There's your daily TTFM. So yeah, so it'll start with that for you, Sonic, and now you're going to start seeing whether you're getting the dailies to give you that bias, and then from there you can go down to your lower time frame and set the other alerts that you want. So, anybody have any other questions about that?
I think that's a great segment to be able to also refer people back to on this recording, just based off of the alert management, setting them up, and also understanding asset selection within the watch
Mm-hmm.
list. It's
Mm-hmm.
really, really good stuff there. Appreciate you sharing it.
Yeah, absolutely. Yeah, yeah, definitely. I mean, and I think part of that, um, not focusing on the higher time frame, I really do think people that learn directly from ICT, him teaching people how to trade on the 1 minute, especially for new traders, I think it's so dangerous. I think it is, especially with his newer content. 2016, I think, was probably the best content he's come out with. 2022 was decent. It showed you how to play reversals. I just think all this new stuff he's got out now, it's just dangerous for new traders. Because everybody wants to be a 1-minute trader. And I think people can trade on the 1 minute, but I think the people who can trade on the 1 minute are the people who have been trading for 4 or 5 years that understand everything that they need to be looking for. Even if you're trading on a 1 minute, you still got to do it within line with the higher time frame, and not just the 15-minute, like within line with the daily. So, and I think it's so dangerous with what he's teaching now to people, especially for new traders. Mm-hmm. Yeah, exactly, Forge. You may get lucky every once in a while on a 1 minute, but if you're not using higher time frame, and I think just when you go down to that 1 minute, it blurs everything. You think and that's one reason why I like the 15-minute. So a 15-minute fractal, C2, C3, is different than a 1 minute C2, C3, right? The higher the time frame the candle, when you get closures on those candles, they mean a lot more. And that's why when you go down to a 1 minute, you see the structure and you're like, oh, yeah, it looks good. And then it just rips your face off. Well, it's just a 1 minute candle, right? Like I see these people playing 1 minute, 1 minute SMTs. And I'm like, oh, man, it's a 1 minute chart, guys. Like it really doesn't mean much. Or like a 15-second or 30-second. Like it's just insane. But you know, some people like it. I'm personally, I'm not a fan of that. Um, the 15-minute, I could definitely tell you, Forge futures. The 15-minute, it takes more patience. I've grown to enjoy that, and what I mean by that is that if I'm waiting for a specific candle closure, um, I'm like, all right, well, it's 9:45, and I want to wait till 10 o'clock. I'll check back at 10 o'clock, right? You have time to do other things and not just have to keep staring at the chart because you're looking at 15-minute blocks of time. So you're like, oh, well, I didn't get this closure. It got close, but it didn't close. All right, well, I'm waiting for another 15 minutes. You know, come back in 15 minutes and see what happened. So you also have a little bit more time to determine what you want to do on a 15-minute chart as opposed to a 1 minute chart or a 30-second chart. You don't have a lot of time to really make the decision, and that can get you into some trouble. So for a custom time frame, 7 hour. My assumption it doesn't. No, I believe it does. I'd have to ask T. Maybe Joshua can answer that.
I don't want to give the wrong information. I'm
Yeah, I
not
don't either.
entirely
Yeah, I
sure.
don't
I
either.
think that the auto bias is mostly paired up with the specific fractals that you see,
Yeah,
uh,
yeah,
given the drop down menu that
yeah.
we talked about.
I mean, I think it does do it on custom. I don't know what the 7 hour, what the next time frame up from the 7 hour would be. I mean, my guess is it would be a daily, but I'm not positive on that. Yeah, so I can answer it on the standard time frames for sure. Let's see here. What's that? What's this? For is that a question you have, Forge? Or are you just saying that's a possible setup there? Yeah, let's take a look at the. Let's see. Gotcha. Okay. Yeah. There's a. So what I would be looking for again, we've had quite a bit of expansion already, but we still have plenty left in the ADR. Let's see here. So hold on, is mine back on? Yeah, it's on neutral. So if I were to go to auto bias one, there we go. We had the C3. So what I would really like to see is the higher time frame wick hasn't been established yet, right? So what I'd want to see is us to preferably now come down, sweep this low, right? I'd want to see this low get swept out and do something like this. Come down, go down, have a close above. Let's see. This is the only up close candle that we really have, and preferably a close fully above that one, and then take the trade out of there. Because then what that means, especially if it closes above here, then that means that's now the higher time frame wick, and you can trade the rest of that candle. Yeah, we got 64%. It's only gone 64% of the average daily range. Only 24% of this current 4 hour candle, and this is where these average range levels also come into play, is being able just to quickly look at the ranges based off of the daily, and then the 4 hour as well. So you can use your stat map. Yep, stat map has the They're just based off a little bit of different things. These are the AR levels are strictly based off of daily high, the high and low of the daily range, and then the average. Now for the average candle range on the 4 hour, mine I'm only averaging out 3 4 hour candles because I don't care about the other candles. So no, I use 21 day. So for my ADR, on the average range levels, guys, there's actually a box that says use day trading realtor settings, and that's going to override all the other settings in here. And if you check that one, and essentially what that's going to do is it's going to give me a 21-day look back period. Yep. And the reason why I use the 21-day is that if anybody knows about hedge funds and large institutional funds, a lot of them use mean reversion strategies, and they use the 20 or 21-day moving average as the mean. So in other words, if they're looking to buy or sell, if they're looking to get long, they want to see where we have extended well below the 21-day moving average, and then try to take a long position. And same for if they're going short, they want to see us extended past the 21-day, and then they're going to play the mean reversion back to the 21. So that's why I use 21 days for my settings, for both the ADR and then the 4 hour. Now the beauty of the AR levels is in the settings when you're on the average candle range. For example, I use 4 hour. You can choose the look back period in candles or days. So what I do in my settings, this 4 hour range that you see right here, which it says currently for NASDAQ, the average candle range is 156 points. That is the average of 4 hour candles from 6 a.m. So the 6 a.m., the 10 a.m., basically those two main candles are the only candles that I'm averaging out, because I don't care about the other average. Because if you're averaging out all 6 4 hour daily candles, it's going to skew that number. Well, I'm only trading between those times for the most part, so those are the candles that I'm worried about the most. So it's just averaging 2 4 hour candles, and it's looking back for the last 21 days. So that's what mine settings are set for the average candle range. As far as the daily, it's just pure 21 days for the average daily range. So we're starting to get a little consolidation here, but like I said, I'd like to see us come down, sweep this low, and get a nice strong close above it to take take some type of continuation higher. Let's see what else we got. What's gold doing? Yeah. Well, you never really know, Iman, but what I want to see is I want to see a close through the opening. So it's all about open, high, low, close. And I know T teaches that a lot. So, like, for example, here we had this. This is gold, basically. We Here's your 10 o'clock. Again, this is not in line with the bias, but this is just saying we went open, we went low, and now we went higher. So that's what you really want to see. I'd prefer to see us at the 10 o'clock open just go straight lower. This one went up a little bit, then down, then up again. So that's preferably what I want to see, is that it opened low first. I did not do that. So like if this was a trade that I would be looking to take right now, the first thing I'm going to look at, I go, well, you know what? We're at 90% of the average daily range. So we're getting close to the average daily range there. So if I'm going to take this, it would probably be preferably something right here. How big is my stop? My stop is about 9 points. So that only gets me to 1R to the full daily range. Um, so again, this goes back to the, are we just taking it? This is not in line with my current bias, so I'm not taking it anyway, so it doesn't matter. But that's where I'd be looking if it was. Chop City Sonic. What is that on Nasdaq? Yeah, I don't. I can tell you guys, I have not been interested in trading the indices in quite some time. They just, and when I have been, it's mostly been YM. This chop in NQ and ES, especially we're at all time highs. The hardest time to trade, guys, is when you're at all time highs. That's like the hardest time to trade.
because you never know, is this just a retracement? Is this going to be a reversal? And not to mention, it's FOMC week. So a lot of people, a lot of your larger institutions, they're going to be waiting until FOMC is passed to see what is going to actually turn into the monetary policy. Um, Again, FOMC, different FOMC reports are more important than others. And anytime you have a shift in monetary policy, those are when the FOMC meetings mean the most. Okay. And their meeting that they had just a few weeks ago. What's the name of it? Anybody can tell me. I forget what. It's out in Utah, wherever they have it out in Utah. What's that called?
Jackson Hole.
Jackson Hole. That's it. Yes. So
There you go.
there's been 2 Jackson Hole events in the last 4 or 5 years that have been very, very crucial. That was the 2022 Jackson Hole. And that's when they changed their monetary policy to tightening. And that's when they started to raise rates. And if you go back and you look at when that Fed meeting happened at Jackson Hole in 2022, I believe it was 2022. That's when they started tightening, and that's when they started to raise rates. So they changed their monetary policy. Okay. Well, from 2022 until this most recent Jackson Hole, which was a few weeks ago, their monetary policy had not changed. They did not change. They were tightening, or sustaining. This most recent one, guess what they did? They changed their monetary policy. They said now it's time to start loosening. And that's what triggered a potential change in the interest rates, right? So we'll see. So that's why this Fed meeting, this FOMC rate decision is so important, because they said at the last Jackson Hole that they're changing monetary policy. It's time to change it. They hadn't done that in 3 or 4 years. It's been the same. So that's why I feel this FOMC rate decision is going to be very important to actually see if they truly are changing their monetary policy to loosening. So we'll have to find out if that's actually going to happen, and that will be on Wednesday. So, and that's one reason why I will be OSOCing on this Wednesday. In fact, the stats are pretty good. Depending on what type of funded account that you're actually going to be going with. But on FOMC, I can just pop in my new web app here. I'm going to be running a 50K account, and it's pretty decent with a 20-point pad. It's at 88% passing rate, so it's pretty good. So that's what I'll be running with for FOMC on Wednesday at 2:00. So.
How many years of data is that? I don't know if I can see
This
on
one
screen.
here goes back to 23.
Well,
Yep.
got it.
Yep. So I try to keep like a 12 to 15 for FOMC worth of data, because again, some of it can start to get stale. So and that's why I like to keep it kind of rolling. But like CPI, let's see, CPI goes back to February of 24. NFP goes back to February of 24 as well. So I'm actually working on a version 2 of the OSOC indicator. This is the new version right here. It's updated UI. But one of the things I'm going to be changing in here is because I know a lot of more people have shown interest in wanting to have more news events tracked. So I'll be tracking. I've stopped tracking them myself personally, because I narrowed it down to really CPI, NFP, and then sometimes FOMC. All the other ones are just kind of crap, but people want it. But I'm going to change the way that the assets are tracked, and I'm going to add a new drop down here. Instead of asset per points, you'll be able to choose the asset, whether it's NQ, whether it's gold, whether it's euro, because depending on the event, the asset classes, some of them move more than others on these news events. So for example, like CPI, in recent CPI events, gold has moved more than NQ has. And the reason being is because gold is more tied directly to the dollar. Same with the euro. So when it comes to CPI events, they have more of effect on the dollar than they do anything. So the assets that are more closely tied to them have bigger movements. So that's what the new version 2 of the OSOK Data Calculator is. And then that will be released probably by the end of the month. I'll have that one out. But so what is OSOC? OSOC is one shot, one kill. Jimmy Wang. If you have not watched the video I did in here about the business side of being a funded trader, I highly suggest you watch that. It's on my YouTube, or you can go to my website, daytradingrealtor.com, and it's right on the homepage. You can see that video. Thanks, Keith. And it explains the method of how I pass evals with just one shot, and how I use statistics data to back it up when doing one shot, one kill. So as well as my funded calculator, here's a good thing to break down. There's another one of the web apps I use. I use this to track how I trade my funded accounts, because my risk that I use, it is a percentage of my drawdown that I actually use to risk. And I have 250K accounts, I have 150K accounts, I have 50K accounts, and I have a couple cash accounts. So when I'm using my trade copier, let me just refresh this here. When I'm using my trade copier, if my leader account, say, is a 250K account, that's a $6,500 in drawdown. Well, 10% risk of that is $650. Well, in order to copy trade that, I don't want to risk $650 on, say, a 50K account. So if I have a 50K Apex account, right, I want to be able to risk the same 10% on that, but not 10% of my 250K account. So that's where this comes in, and it gives me what my copy ratio needs to be. So in order to risk, if I'm risking $650 on my 250K account, my copy ratio in my trade copier for my 50K account needs to be 0.38. So that way it can actually risk the same $250. So I'm still risking 10% across the board there. So and then, like, if I have a 150K account, it's just right here. That's what this is. It does the same thing. So my copy ratio would be 0.69. Now, there's only one trade copier that allows you fractional copy ratios. Most trade copiers, except for the Apex Investing trade copier, not Apex at funding, but Apex Investing, it's the only one that allows you to do fractional ratios. All the other trade copiers, when you're doing a copy ratio, it's 1-2, 1-3, 1-4, or minis to micros or micros to minis. Yeah, so this is a calculator. Yeah, so this is available on my website as well. It's something that I've used for years for myself, but I've made it available to others because I found that it was very useful for me, and it helps me keep track of my accounts, and then it allows me to know how many trades away from a payout I am. And I think it's huge for new traders. They don't understand how to risk properly. They may get a 50K account and they're like, hey, I'm going to risk 2 minis, or I'm going to risk 3 minis. Well, great. You're going to probably blow your account really fast. So part of that is just because they don't have something that does the math for them, that gives them a breakdown. And so this is a perfect example of this. So here's a 50K Apex account, and here's a 150K. Well, actually, let's go to, this is the same, 100 or 150K Apex account. When you risk 10% of whatever your drawdown is, so risking 10% of this number right here per trade with a 50% win ratio and a 2R factor, it doesn't matter the size of the account. You're going to reach a payout in the same number of trades. Doesn't matter the size of the account, right? Because you're risking based on a percentage of your drawdown. And then it's also going to take you 21 trades, 10 trades if you were to blow your account. Now, one other thing about this is, for example, Tradeify. A lot of people probably don't know, Tradeify quietly changed their minimum payout thresholds. Okay. But before they did that, let's look at their rules. Let's go to Tradeify real quick. let's go to there.
Good question for you. How do you
Yeah.
stay updated on the rule changes and all that stuff for some people that might be asking that to themselves?
Well,
What are like the news sources, or what are the
just
type of resources
their
that you
socials. Again, I only trade Apex and Tradeify, so it's easy for me to keep up
use?
with it. But it's really so Apex has been pretty good. Apex has been like they'll blast out emails like, "Hey, we're changing stuff." But Tradeify, it was their X account. I just follow them on X, and what it was is they were like, "Oh, hey, we have new." Like they pitched it as you can pull out more money now when you reach your minimum payouts without really telling people that they also raised the minimum payout balances, right? So once I saw they did that, I'm like, oh, let me go to their site real quick. And then I just went, and it's very simple, guys. Anybody that wants to be a Apex investing, Keith is what I said. Anybody who wants to be a funded trader, and I get this a lot because I've been doing OSOC for over a year now, and I've had thousands of traders successfully pass accounts. They'll message me and go, "Oh, well, what about this and that?" And it's like, did you not go to their website? Anybody right now, if you want to be a funded trader, and even if you are a funded trader and you don't know the rules, go to your funded company's website, go to their help center, and type in payout, minimum balance, whatever it may be. Read the rules for yourself. Okay, that's the best thing you can do. So you understand what your minimums are, what your maximums are, what the rules are that of breaching, all this other stuff. Because without understanding, and I think that's where a lot of the people are like, "Oh, I got denied a payout. This company's horrible," and some are scammy. But when it comes to like Apex and Tradeify, most of the time it's just because you didn't understand the rules and you broke one. And then because you didn't read the rule, they tell you broke it, you get pissed off. But realistically, if you just went to their website and you read the rules, you would have known, okay, from the very beginning, this is what I need to do. So just following their X account, or for example, Apex, their Discord, just following those, that's how I've done it. But here is something that's very important that Tradeify changed. So this is for their growth and advanced accounts. Okay. And if you see here, and I can make this bigger, you now have different, how it says growth or advanced purchased after September 12th. Okay. So they used to have it before September 12th. Now they have it after September 12th. So before September 12th, this is what your accounts were right here. Okay. So a 50K account, the balance needed to reach your minimum payout was $5,200. So let's just $52,100. Okay. So let's do this math real quick. So let's say this is a Tradeify 50K account. You have 2,000 in drawdown, 50K, $52,100. Okay. Now let's look at their 150K account. Their 150K account, the minimum balance was 154,600, which is the same as a Apex account. So that's this one right here. So let's then say you have an Apex account, a 250K Apex account. Oh, 6,500. All right, 250K, and it's 256,600. Okay, so this is all before the new updates, and we'll get to what the updates are now. And the reason why I want to break this down for you guys is it's very important. Not all funded accounts are created equal. Okay, and so here we go. Once again, we have 4 different types of accounts. Oh, sorry. 3 different types of accounts. Let me add in the 50K from Apex. It's 2,000. Okay. 4 different type of funded accounts from 2 different vendors. Okay. And I know I kind of here, let me do this. Let me scroll this up here. There we go. Okay. So this is Apex. So we have a 50K from Apex and a 250K from Apex. And then we have a 150K from Tradeify and a 50K from Tradeify. All of them, once again, if you're risking 10% of your drawdown with a 50% win rate and a 2R factor, every single one of them, you're going to reach a payout in 21 trades. Okay? Same across the board. Doesn't matter what it is. The difference is these 2 accounts, once you reach your minimum threshold for a payout, you're only going to get $500. If you want to get more than $500 with Apex, you have to continue trading past this minimum threshold balance. Okay. With Tradeify, if your account was purchased before September 12th, these are your minimum thresholds. This account, you're going to be able to pull out $2,500 on your first payout. And this account, you're going to be able to pull out $1,500. So that's 4 different accounts from 2 different vendors, 2 different funded companies. All are going to reach the payout in the exact same amount of trades, 21 trades. However, you're only getting 500 with these 2. You're getting 2,500 from this one and 1,500 from this one. So which funded account do you guys want? Right? You have to be able to understand the math behind this to understand, well, what are my goals? Where do I want to be? Right? So that's another reason why I created this funded account calculator, is that way I can go across all the different prop firms and go, here's the thresholds, here's the levels, how many trades is it going to take, how much am I going to get on a payout? And that way you can, from a business standpoint, understand what accounts best for you. So these top 2 are Apex right here. These bottom 2 are Tradeify. So the bottom 2, it's okay. No problem, Baxter. And maybe if I put in here Apex.
Might be a good suggestion also to see if we can, yeah, exactly.
Yeah.
That's what I was just going to say.
Yep. Sorry, guys. I should have just done that from the beginning. That would help. So. There you go. There. So that should help. So again, this is going to give you a $1,500 payout. And this is going to give you a $2,500 payout. And both of these are only going to give you $500 payouts, right? So it's something to do. Now, let's go over what Tradeify quietly changed, okay? So what they did was any accounts that were purchased after September 12th now has a new minimum that you have to buy. So for the advanced accounts right here, where's it at? Yeah, growth. So here, they're now the same. So before they were a little different, depending on if you had growth or advanced. Now both growth and advanced have new minimum balances that need to be reached. So a 50K Tradeify, now you have to reach $53,000 or 3,000, sorry. And a 150 is 156,500, which is more like a 250K account on Apex because it's $6,500. Now, keep in mind, your drawdown is the same. Okay, so on a 150K account, you have to reach $6,500 in profit, but you only have $4,500 in drawdown to do it on. With a 250K Apex account, you have to reach $6,500 in profit, but you have $6,500 in drawdown. So you have a 1-to-1 ratio. With these new updates, your ratio based on what your drawdown is and what you have to reach is extremely higher now when it comes to Apex or to Tradeify. So now the new Tradeify you have to reach is 156,500. So that changes the ratio now. So now the 2 Apex accounts, you can reach a payout in 21 trades. Now on Tradeify for a 150K account, now it's 29 trades. So you take 8 more trades to get to a payout. And for a 50K, it's 9 more trades you have to take to get to a payout. So they did this under the guise of, oh, well, you're going to get more money when you reach the minimum payout, which is true, but it's only true on the second payout. So if we go down here and we scroll down, and so here's the minimum payouts, right? So let's see here. This is, which ones were before? Yeah, so purchase before. So this is what you had before September 12th. So again, on a 50K account, once you reach your minimum threshold, you can pull out 1,500. On a 150K account, you can pull out 2,500. Well, guess what? It's the same for the first payouts. It's the second payout, and it's only on the 50K account where you can get more, or on the third payout, right? So they're like, oh, hey, we raised the amount that you can get on your minimum payout, right? By what, $250 or $500? But on the second payout, oh, but we're going to leave out the fact that it's going to take you 10 more trades to get there before you get to your payout. So I thought that was sneaky how they threw that in there. How they marketed that. Oh, hey, you're going to get more money now. They didn't say anything about it's going to take you longer to get to that payout now. So, and again, with having this funded account calculator that you can get at my website, this allows you to not only track all of your accounts, but it allows you to go to all the different the funded accounts, put these ratios in, and have a true understanding of how many trades based on, your win rate and your risk percentage, to really have a realistic idea of how long it's going to take you to get to a payout. Possibly, yeah, possibly, Baxter. So, but yeah, this is just, again, this is a tool that I've had for myself for a long time, and I've had a few trading buddies that I had given it to, and they're like, "Man, this thing's awesome." So I figured, you know what, maybe other traders can benefit from having this. So, and like I said, on mine, I have all 20 of my accounts. Whenever I take a trade, as my balances update, like for example, let's say, we'll say you're at, 50. Your current balance is 51,250. Oh, well, now I'm only 11 trades away, Oh, now my balance is 52,000, Oh, I'm only how many? Just a couple trades away there. Well, let me refresh that. Sorry. There we go. My token expired. Yeah. Now I'm only 5 trades away. So it allows me to know where I'm at all times on my accounts, to understand how far away I am from a payout. And you know what? You might want to try out different risks. For example, let's say I want to risk only 7.5% of my current drawdown. Okay. Well, now it's taking me a little bit longer to get to a payout, but I also have more trades to before I blow an account. Let's say I'm risking 5%. Okay. Well, now it's taking me a lot longer, but I also have more trades to get to before I blow my account. Because this is the important part, guys, is how many trades in a row can you lose before you blow your account? And the other thing with my risk-based system is that as my drawdown goes up or down, I'm still risking that percentage based off of that new drawdown. Yep, that's the difference to liquidated. Yep. So, because like, for example, say you start losing some trades and now your drawdown's $1,700. Okay. Well, now I'm risking based off of $1,700 in drawdown. Not that fixed, I'm going to use this number of contracts no matter what. And that's why so many people blow accounts quickly, because they don't understand using the percentage-based risk to keep your account funded and not to blow. So using a percentage-based risk, every time you take a trade, if you're risking 5%, regardless of what your drawdown is, you're always going to be 20 trades in a row, losing trades in a row, away from blowing your account. And every time it changes, it's going to refresh again. It's going to be another 20 trades. So now if your drawdown's $1,500, well, now you're only risking $75. You're still 20 trades away. So this is a way to keep yourself in the game, right? And allow you to really truly understand the numbers and the math behind where you need to be to get to a payout and how many trades away you are from liquidating one of your accounts. So hopefully you guys get some value out of that.
This is great. I think that this is actually even if we take the video and record like this video recording and basically cut it up into 2 segments, it's pretty much the TTFM, and this is like the business side of trading part 2. So
Yep, absolutely.
I really appreciate that.
For sure. Absolutely.
Does anyone else have any questions as of right now based off of what you're seeing? Can you just give like a small little overview of like basically the calculator or the website, or again,
Yeah.
I'll drop the link in the chat for people to.
Absolutely.
That's
Yeah, absolutely.
daytraderealtor.com.
Yep. So
Here you guys go.
we have the two calculators, and one of them is for OSOC. And for those who don't know what OSOC is, obviously number one, risk disclaimer when we're dealing with OSOC, it is something that is high risk. It's not something I only OSOC when I'm paying for funded accounts that are extremely cheap, like 80 to 90% off. If you're paying full price, don't OSOC, right? When they're extremely cheap, and if you can't take that cost of an eval and light it on fire and not care about it, then you don't OSOC. Like, let me be extremely clear about that. Only do this if it doesn't matter to you. And so if you want to fully see the OSOC and the business side of being a funded trader, I have the first video, first stream I did here. It's on my YouTube channel. Or you can just go to my website. And in that video, the business side of being a funded trader, it's the first video on my website. It's right there. Yep, there it is. Yeah, you can see it. And so the OSOK data calculator, what we do for OSOK is we're straddling the market. We're not guessing which direction it goes. We just want it to go one way or another. And what the OSOK data calculator does is it gives us this thing right here called a pad size. And the pad size is I'll show it to you right here on this. It's a free indicator that I have. And what it does is it marks lines on your charts of where you want to place your orders. So if you have a 43-point pad right there, and what this does is it helps to prevent manipulation. So if this is CPI and it's dropping at 830 and it opens and it goes high by 30 points, but then drops down because it's doing a manipulation, the protection pad is where you're going to place your orders, right? So it protects you from getting wicked out before the actual move happens, but that's based off of historical data of the news events themselves. So I actually measure this down on a 1-second chart. And most of the time, this happens in the first 3 to 4 seconds. So like when you see these numbers are based on the first 3 to 4 seconds after the news event drops. And so it comes up with a actual number. So for example, with CPI, the average open to high, so the open to the highest or lowest point within the first 3 or 4 seconds before it retraces is 94 points, and the average manipulation is 12. Okay. Then we have our best pad size. The average best pad gives you an 88% passing rate, depending on the type of account that you have. So this is for example, this is a 150K Apex account. If we were to do a 250K Apex account, it's 27 contracts. The passing target's 15,000. It's still the same passing percentage. Now, let's say we have a 50K Tradeify account. Okay, that only allows 3 contracts and the passing 3. Again, the pad size is different. The passing ratio is different. So that's what this OSOK data calculator does. The funded account calculator is what we just went over, which it helps us to determine what our risk is going to be per trade, and then also helps us show what the copy ratio needs to be in our trade copier as our accounts are traded and the balances go up and down. You may have an error on your trade copier and only 4 of your accounts took a trade and they wound up being losses. Well, now your balances need to adjust because your drawdown is going to be different than your other accounts. You may have multiple different size accounts like I do. I have 2 50s, 150s, 50s, and then also I have some individual cash accounts. So my ratios are all different. So this allows you to see what your copy ratio is that needs to be in your trade copier so you can risk what you're going to risk on your leader account, and then it copies that across all the other ones at the same ratios. So you're always risking, whether it's 5%, whether it's 10%, whether it's 7.5%, whatever it may be, you're risking the same across all your accounts based on your drawdown. And then it also tells you how far to a payout you are, and then how many trades to liquidation you have. So those are kind of the two calculators that we have there. You can get them on my website. You'll see the link there that he posted there in the chat. Again, Marcellus, that is going to be a personal decision that you can make. I personally, like, I don't know if you went over the part or saw the part where I broke down how many trades it's going to take to get to minimum payouts and what those trades are. That comes down to the business side of things, meaning from a business standpoint, if you're going to invest X amount of time into trading, learning how to trade, pass evals, then getting to a payout, how much money the actual eval costs you up front, how much money the funding fee costs you, right? So how much is that going to cost you? And then how many trades it's going to take for you to get. Then once you get to that payout, how much are you going to get as a payout? So, for example, the majority of my funded accounts are I think I have 14 250K Apex accounts. I bought the majority of those Apex accounts at like $20 an eval. And then I also got them for $85 lifetime fees. So that means my cost into those accounts were around $100. So that's what my cost out of my pocket was to get those funded accounts. Then from there, it's how many trades it's going to take you to get to an actual payout. How much time is that going to take? Well, if it takes you 21 trades, how many trades a week are you taking? Are you taking one trade a week? Taking 2 trades a week? Let's say you take a trade every single day. Okay. Well, then that's 5 trades a week divided by 21. That's about 4 weeks it's going to take you. Now, well, what if you only take 2 trades a week? Okay. 2 trades divided by 21. That's about 10 weeks. That's about 2.5 months it's going to take you to get to a payout, right? Depending on your risk percentage, your win rate, and your R factor. So that's all going to be a personal decision on what you want to do. Yeah. That's a question you have to ask yourself. What might be sufficient for me, Marcellus, might not be sufficient for you. So that's why I can't really give you that answer. I personally like Tradeify and Apex. Those are the ones I like. There are many others. My funded, Take Profit. There are other ones. I just have personally liked those two, and that's what I've always traded with.
Really good questions so far in this whole live stream. Appreciate it. Baxter's funny.
My realtor appraisal pitch. Homes are only worth what somebody's willing to pay for it. There's your pitch.
There you go.
Doesn't matter what the appraised value is, man. Appraised value is only for mortgages. Appraised value means nothing. Yep. It's only worth what someone's willing to pay for it. And value is in the eye of the beholder. No, for the most part, I don't trade below the 15-minute chart. I might every once in a while if the stop is looking like it's going to be huge on the 15-minute, I might drop to a 5-minute just to have a sneak peek and see if it's the same setup with just a little bit of a smaller stop. That might be only time, but other than that, it's 15-minute for me.
All right. Does anybody else have any last questions that is here right now with us inside of the 2Degrees Escape Discord? Eric360 is asking a question about basically the 15-minute chart and having not enough time to carry out a full trade. He has definitely mentioned that there's a cutoff time, and that's just something that you got to just be able to respect in terms of prop trading. So, you're
so
absolutely right
that
on
happens.
some occasions.
Yep, it can happen for sure. Air, but I have found, doing this for over 6 months now that it happens a lot less than you actually think. Again, the 15-minute does take a little bit more patience on waiting for a trade to set up, and maybe holding it for a little bit longer. All just depends on where your stop is and how big that stop is to and if you're going for 2R or more than 2R or whatever it is you try to go for. But yeah, there is a stop point, and if by 4 o'clock I haven't hit my 2R or my stop loss hasn't been hit, I just close out the trade. So it is what it is. It's nothing that's deterred me to where I'm like, oh, I'm not going to trade a 15-minute because of that. So. Absolutely. Yeah,
Looks like
I'll get it uploaded.
yeah,
Yeah.
looks like there's some great questions that have been asked and answered. So we appreciate everyone's participation and interaction as well with the whole entire stream. I want to thank Day Train Realtor for being here as well, for taking time out of his day to be able to share knowledge and be able to show you guys what he's also been working on. So yeah, if there's any other questions, you guys can always ask them in the general chat. You know, our team would be able to help out as best as we can. And yeah, we look forward to having you in the future at any point you want. You know, you're always welcome. And I appreciate everything.
Absolutely. You're very welcome. Good. Glad everyone enjoyed it.
All right. If you guys can drop a heart or just say a couple of words in the chat and, you know, thank Day Train Realtor for his time, I would appreciate that. I'm sure he would appreciate that as well. And we wish all of you guys a wonderful rest of your day ahead, a safe week. Again, as a reminder, this is contract rollover, FOMC, and also a monetary policy potential shift in what we're also about to see. So just please be cautious of your own trading responsibilities and decisions. And we look forward to seeing you all with us in the future.
Yep. Awesome. Thanks, guys. Have a good day. Thanks,
Have a
Josh.
good one, everyone.
Yep.
Bye bye.
See ya.
Thank you, Adam.
Yep.
Bye bye.
Bye-bye.